Good morning, everyone. So in this video, I'm going to put out a couple trade ideas. I see some setups that are actually at really good levels right now for entries, and I've started to take some of those entries. So I'm going to point those out to everyone who's interested, and then we're going to cover, just the kind of basic rundown of the market read. It's got a few hours left in the trading day. We're about halfway through, so let's figure out where things are going. Let's start out with the trade ideas in this video, just to keep it a little more interesting. So here's one, PAAS. It's a short, and the reason why I like this one, couple things. All right, we'll give you the big picture and then we'll narrow it down. First, on the daily, here's your uptrend line for all of 2020. This was your uptrend. You can see it just went into this complete robotic grind session higher on the daily, and then we broke. So the breakdown was really about here. My trend line could be slightly off, but the trend was broken, is obvious. So we broke. We did some back testing. Here's an obvious breakdown right there, and a gap down, and then it was followed with impulsive selling. So that's your breakdown of trend. So the trend is now down, and the trend has been down. So what has this thing been doing? Well, it's been chopping sideways like this. And the profit target that I had was right here at 30.54. That's my first profit target. And then the second profit target I have is about 26. It's about 26.10. And we consolidated sideways in this trading range for a while, and then it finally impulsively gave way and continued the downtrend. So this thing is continuing to move down. And this was my first profit target. I took profit there. Really, I covered my short position, and I was looking, and I pointed this out in videos, I was looking for a bounce back up to this breakdown level right up here around 32.50. And that's where we're at right now. We bounced right back up into resistance, and let's narrow it down, show you what I like about it. You can see here, this is the trend line on the hourly. You can see we held that as support, then we broke. So we're having a kickback to that resistance level now, and we overshot it just briefly on the hourly, couple hours above it, and then it faded back below, and we're just chopping around, trading right at it. So I think that this should hold as resistance, and we'll work our way lower and start to once we get back down to this level around 30.50, since it's the second test, we'll probably have a slight reaction, but I think that will be a pretty muted bounce, and then we'll roll over and slice right through it. So the trade idea that I have, it's just everything on here is my opinion, but an entry here, a short entry at around 32.50, and this thing rolls over down to about 26, and that move. And that's about that. That's the end of the trade. At that point, if we hit that profit target right there, I'll cover, and I think that's the end. Now, this should line up with silver, SLV. So here's what we got going on with silver. Silver, we had a bear flag right here. I've kind of marked it out, and this line isn't a trend line. I'm just trying to show you that we had this flag action move down. And then we're making this flag right here. We're just kind of walking up this flag. Flags usually go to about the halfway point. So you can see we had kind of a cluster of reactions right in here. So we're coming up into that. The most I think this thing should go is just slightly above this, 23.10 or something like that. And then it should fail right there if it even gets that high. Now, if it fails, if it fails, you're looking for a break of the bottom of the flag, and then look for a continuation of this flag pole. So let's say we break there, or let's say we break right up here. If we go up to this 23.10, the break is going to be, the target's going to be right around 18.50. And that's what I see, is somewhere right around 18.50, maybe undercut it, maybe fall short. But the reason why I like 18.50 in SLV is we've got these gaps right here, these two gaps. Gap support is 1982, and gap 2 is 1850. So I think we're going to break the flag, run down, fill the first gap, maybe get a slight reaction, and then break and fill the second gap. And that will be the end of the sell-off in silver. And that really sets, that's probably a great a great point to start to flip to longs in silver, silver miners, gold, etc. The precious metal trade, basically, that has been working for over a year and a half. The precious metal trade has been working, and it's in a longer term bull market. So I see this as just kind of a pullback trade. But from here, that's a pretty good sized move in silver. That's almost another 20% drop. That should flush out all the bulls that jumped on board on this impulsive move higher. And then that's where I'll be looking to add long exposure. So that's a trade idea there on PAAS. And just to give you the silver setup, another idea here is Philip Morris. Okay, so here's what I like on Philip Morris. Okay, Philip Morris, we'll look at the big picture and then we'll look at, narrow it down. All right, Philip Morris, here's your downtrend in Philip Morris. So Philip Morris has been in a bear market. It's been in a downtrend. Really from the highs up here, the thing is down about 40%. And to the lows, it was actually down 54%. So, it's been in a bear market. But not all bear markets don't last forever. And here's the thing. We broke down, here's your down channel, kind of the downward price channel. It's this top of this red line. We broke out once, and that was a bull trap, failed. We broke out again, which is kind of where we've been trading right now. And, the anticipation is that this breakout is going to hold. So here's your breakout. You're doing a back test right now, and I suspect that it's going to hold here and, move higher. So that's the trade. I mean, if it doesn't hold, then you cut and run basically, but you're close to the level where it should hold. So this is a position near risk, and it keeps your risk very small. Now, the other thing that I like about it on the daily, you can see here, if I tweak this just slightly, it shows better on the hourly, but I want to show it here on the daily. We've got a little bit of a bullish divergence. It's starting to, we'll see how the day closes, but I suspect it'll hold. But it looks like a bullish divergence. We had it in place right here. And if this can hold here and the daily can start to move up from this level, then it should hold this bullish divergence here. And you've got lower prices and higher momentum. I'll show you here on the hourly. It shows a little bit better. On the hourly, you can see here clean and clear positive divergence on the hourly chart. So we're diverging, and it's on the PPO as well. I just don't. There it is. So the divergence takes place. It really got put into motion right here. You can see that we made a lower price right here than the previous low. And yet the momentum indicators made a higher momentum indication. So it's negative, it's positive divergence. Sorry, not negative, but positive divergence. You've got positive momentum while price continues to sell off. And today is a new divergent low right here. So buying, going long on positive divergence when you're at the divergent low price is a very high probability price. And you can see right here, we put in a higher momentum low right here, and price just barely dipped down, making a new low. The previous low was 74.89, and we're at 74.56. So I was adding to my position here, and what I'm expecting is that we hold and probably close the day above the 74.77 or 74.75, somewhere right around there. And that's what I'm looking for. You also have this bearish or bullish falling wedge. That was kind of a short-term wedge right here. We broke out and we're coming back down for a back test. So lots of support, bullish divergence. All in all, looks pretty good to me for a long, and that's how I'm playing it. Again, this trade is just my opinion, but that's the one I'm watching. Okay, another one, DraftKings. Now this one's probably going to play some games with you because this one is very volatile. It moves quite a bit, but again, it can move down a lot too. So bigger picture, let's look at what we got going on. Couple things. One, I do see a potential for a big bull flag, and basically we've been working our way up that flag, but this flag pattern is a pretty big flag. So that is possible, and we could be going higher on the daily chart, because here's your flag pull, there's your flag, this big sideways consolidation, and then you're breaking out to the upside, what looks like it's setting up for another flag. But couple things that I see that are telling me that that's not going to be the case. One, negative divergence is starting to play out on the daily chart right here. You can see it in the RSI. This high that we just recently made was a divergent high where we made a lower high in the RSI and a higher price. So that's a good, it just puts a lot of resistance up at that price. It just tells you that there's not nearly as much enthusiasm and momentum at that higher price. And so that often leads to, the big sell-offs. If you look at the hourly chart here, you can see we had this uptrend line right here. We were walking up this trend line, we broke, and we've come in for a back test. It's popped up for a back test. And you can see a lot of the time when you get these back tests, you'll get these really whippy candles where it just spikes up into the back test. And that's what we saw today, and we've started just kind of do these little spikes, 1 hour spikes, and then it fails. So far it's playing out for, what this looks like is a back test, and then we're going to roll over. On the hourly, you also started to put in some negative divergence for the very short term right there, just slightly. It's right about there where you started to make when we spiked, basically. That's not that clean though, so we'll just get rid of that. I like the daily, and on the hourly also, you've got this divergence, which is basically what's showing up on the daily too, but here's your peak right back in here, and then you came down and made a higher price with lower momentum, and it's starting to turn over and coil down. So that tells me that we're going to move down. First profit target that I've got is 43.80. And this one I've played successfully in the past. We took the breakdown right here. I took the back test at this level and was able to basically ride this thing down. I think I sold it right about here for a 25% gain, and it actually went down a little bit more from there. It went down another almost 10%. But you never know exactly where it's going to stop selling. So this one up here at this level, I'm looking at about a 25, 26% gain and possibly more. So that is the trade idea there. All right, XOM. This thing has been kind of rough for me. It's not really working out. So I decided to cut it again. Keeps beating me up here and there. I was up yesterday on the trade, looked good, but then today they fade it hard. So I guess it's not done selling, and I don't have... there's no positive divergence. I don't have that. So really, that's one lesson that I've learned, is that if you have no reason to be in a trade, you really shouldn't be in it, because you have nothing to trade off of. There's no level, or there's nothing that when you get beyond that threshold that tells you you're wrong, and gives you an opportunity to say, okay, I'm wrong. Let's get out. Let's take a loss. So what you end up doing is you hold the trade, and you end up just staying in it, hoping that it's going to recover and turn around. But it's not based off of anything. It's based off of hope. And anytime you're trading based off of hope, you're just, it's just usually not going to work out for you. So this thing's making a downward price channel. I had my trend line. Get rid of that line tool here. I had my trend line right here, previously down here, and it looked like we did a breakout and then failed and then broke out again. But now that we've got a couple reactions, I decided to move the trend line up here, and that doesn't give it nearly as good of a look. It tells me it's in a downward price channel, and that's fine. I just cut it, and I'll let this thing continue to go down in its price channel. And then what I'm going to do is wait for positive divergence, which looks like it's starting to set up. You can see it right here. If this turns up here, or starts to turn up, or maybe we come down to about here and then maybe tag the bottom of the trend line and then turn up, then we'll start to have positive divergence. And at that point, what I'll look for is a breakout of this channel. So if we can break out of the channel, if we got positive divergence, we break out of the channel, that's going to be the buy signal I'm looking for. Until then, I'll just let this thing continue to do its thing. So off of that one, all right, PHM, home builders. So these things have pretty much been on fire for a while. I haven't really been trading these, but looks like we're starting to get a potential. I mean, it looks like the setup's there, and we had a back test today. So let me show you what I'm seeing here. All right, here's your uptrend line in PHM, Pulte Homes. And we basically broke the trend right. The break really happened. It really happened right here. This break didn't count because you gapped down and closed the day. We're on the daily chart and closed the day right at trend line, right at the trend line. And then it popped up. So the break was right here. And then today was a back test. So they basically, let's go to the hourly here. There's your back test right there. And that's the objective area. It's a little far away now for me to take it. You know, we're about 2.5% away from kind of the objective area. And this thing can do another back test. And if it does another back test, you know, it's going to be up more. But what I want to point out is if it does another back test, you know, then that's another objective area to add or start a short position, in my opinion. But even if you're not going to take this trade, because you know, it's just getting started on the daily, so there's obviously, you know, potential here, but there's lessons to be learned. So gap fill, I think that's where it's heading. Here's your gap right here on the daily. So we break down, grind kind of lower, and then impulsively sell off, and we hit the gap down here at 39.57, and from where we're at now, that would be a profit of about 12%. So that's the trade idea. You can see we also had negative divergence in the daily. Here's the RSI, and we made a peak right back here. Then it popped up again and made a divergent high price. So price was higher and the momentum was lower. So that was your divergent high right there. And so at that point, that gives you a signal, okay, let's look for a trend change. And then came down, held trend line support, and then we broke trend. So we're just starting what looks like to me is the beginning of the trend change. Okay, Zoom, you don't have a sell signal yet, but you do have negative divergence, so it's telling you look for a trend change, but we don't have the trend change yet, so there's no trigger, but there's the setup. So you can see here starting to get negative divergence. Right there, we have confirmed negative divergence basically because you made a lower peak with a higher price. So I look for this thing to break back within the trading channel. This trading channel you can see has just been walking up right here, really creating a bearish rising wedge. And we're above the wedge now. So this is a low probability area to be long. And you know, when you're outside, when you're to the upside of a bearish rising wedge, that's a low probability. So what I see is we recover the trading channel and then probably break to the bottom of the trading channel and then probably have some sort of a kickback rally and do something like that. I don't know exactly where it'll go. You know, I've got a level down here, 178, you know, maybe there. But that's what I think is going to happen in this one. Again, there's no trading setup though. There's a setup, but there's no trigger. So the trigger for me would probably be a break of this support here, of this bearish rising wedge. And that might come in at 420. I don't know exactly when it's going to come in, 427, depending on when we get there. And that's what I'll look for on this one. There's a lot of hot air in this stock. You know, a lot of retail investors are piled into this thing. And it's had a pretty good run, so you might see institutional distribution and profit taking. KHC here looks like it. You know, it's doing so far what I thought it would do. I pointed it out in a video. We came down and hit this support here at about 28.44, and I figured we get a bounce up to about 29.97, $30, and then I think we're going to roll over here. We don't have there's no divergence. There's just negative momentum right now in the daily chart. This thing got pretty oversold though. You can see it got down to about 20. So we could even pop all the way up to this 33, I guess. but there's no divergence in the momentum. Momentum is lower. What I'd like to see, where I'm looking to buy this thing, if I can get a shot at it, is around this $25 range. That's your head and shoulders. Here's your right or your left shoulder. Here's your head. And if it can put in a right shoulder, then that's potentially a big, large bottoming pattern. And that trade would set us up for a break of the neckline and a move up at least to about 47.91. And possibly only 42, but I think we'll probably get 47. So both of those would be areas to potentially look at taking profit. You'll probably get a reaction around 42 and probably get a reaction, up around this 47.91, or, it's in the area. So that's a trade idea there. But you can see we don't have any, look, there's no real divergence going on. You've just kind of got sideways to bottoming action. So I don't know. I think we go lower down to this 26 or 25, and then we'll evaluate it then. NVIDIA looks like it's getting close to a potential short. And the reason why I don't want to be long this thing is because you got trendline resistance right up here at 560. Depending on when we get there, but 567 we'll call it. And, there's just not a lot of reward for the risk. What's left on this thing, maybe 6% or so, a 6% gain. And then the potential for, a possible, I guess from here, if it rolled over here, there's potential for, 25% drop. Even the first profit, the first support line would be about a 12.5% drop. So the risk reward ratio is horrible. And that's why I don't want to be long. This is a better setup for a short trade. And so you want to look for the best risk reward ratio. And that's the direction that you want to play it, basically. So NVIDIA trendline support right here. We were walking up it. We broke it right there. We've been back testing. Looks like it wants to come in for another back test. That makes sense for this stock because this is like a cult favorite. Everyone loves this stock because it's done so well this year. So to see dip buyers step in at the first little sign of weakness makes sense. And what I would be looking for is to start a short position up around that 565, 567 level, a back test to that trend line. If you really wanted to, have better confirmation, you could wait for the back test and then wait for the next candle, the rejection candle, and then take your position. That is a higher risk area because it will have gotten away from the resistance line, but you'll have a higher probability because you got confirmation. And Tesla, we do have negative divergence here on the daily. It's basically equal, but when you have an equal or lower high and you have a higher price, that's negative divergence. So here's your previous high here on the daily. Then you made a higher high right here with an equal momentum indication on the RSI, and on the PPO it was a lower, so clear negative divergence right there. And so that tells you trend change is coming or should. And then you have the trend line here that we look at, walking up the trend line, and we undercut it. They've recovered it and they've managed to hold it, but it looks pretty weak to me. Looks like it's having a hard time really moving much higher. Here's the recovery. We gapped and it's just kind of grinding higher. So we'll see. I'm still in this thing. This isn't, impulsive enough of a recovery for me to get off of this short. I think it's going to break trendline support. Not the highest probability trade because we haven't, we're above support as of right now. So you got to watch that one and have your position size accordingly. This thing can run pretty hard. So, I think position size, you don't want to be too heavy on this thing, until you get maybe some momentum indication. Okay, let's look at some sectors and then the indices and we'll wrap. All right, XLF. Kickback rally right to support or resistance, 24.18. You can see we didn't hold the support, it didn't quite tag it there, but tagged it there, kicked back there, starting to roll over. XLF, to me, I think goes lower from here. XLV. Kickback rally right up there near that flag. My flag might be off slightly, but we had a kickback rally. That made a lot of sense because we hit our projected target right here at 101. So you have a reaction, kickback. Now I think you roll over and roll down towards 97. Obviously, we could go sideways for a while and then break down, but 97 I think is the direction. Qs. All right, so Qs had this little uptrend line right here on the hourly. We broke. We've gone sideways. I think we're going to gap fill. Looks like there's a gap right here, probably about this 272.40 area. So I think we're going to gap fill. I don't know if it's going to happen today. They might open it down there tomorrow, and then the buyers will probably step in. So I'm going to watch for that. But as of right now, looks like it wants to gap fill and then possibly move up to this 280. 280 is the area I really think the sellers are going to start to hammer on this thing again. They don't have to, but that's the area that I think that they'll try at least. And then if they don't, and the buyers continue to push this thing higher from 280, there's really nothing standing in the way for kind of a full back test of this trend line up here around 296, 297, depending on when we get there. That's your trend line right here from 2020 that we broke. And we haven't really had a good full back test. I mean, kind of did right there. I mean, I guess you could call that a back test. It did tag it briefly. But, maybe it wants to do another full back test and, come near the all-time highs again. I don't think it's going to happen, to be honest. I think around 280, maybe we'll overshoot it slightly and then fail. That's what I think is going to happen. And in the video I did yesterday, I said we're going to go up maybe a little bit more and then down. That's what I'm talking about. I think maybe we go up a little bit more to 280, somewhere right around there in the Qs. It's not that much farther up from where we're at. That's only, 1.5% basically. And then from there, maybe we get rejected and continue lower, probably down to this kind of purple target zone that I have, which is really my target for this price action that we see right now. So if we get down to this purple level, then I think we're going lower. I think we're actually heading down to this level down here around 226. So it's just piece by piece. You take it piece by piece. If we roll over here and we get down here, that sets in motion maybe a small bounce, and then we roll over time down to this 228, and we'll be at the bottom of the price channel, the big long bull market price channel in triple Qs at that point. Now, if or when we're down there, we wait or look for signs of a breakdown of that level. And if you break down from that level and you can hold and the Fed doesn't step in, which they probably will, they've done it twice already. Each time we broke this channel, the Fed stepped in, one of these times the Fed's going to step in and it's not going to work. And that's probably what sets in motion the prolonged bear market that I think that we're in and heading towards. People will realize once we're already well into it. But again, all those things have to line up and come together. And until they do, we just trade, the charts that we have. But if we break that, then I've got longer term price targets down here, 114, 97 on the triple Qs. That's what I see. And SPY, same kind of deal here on the SPY. There's a gap right there at 329.58. I think we run down and tag that, maybe undercut it slightly, tag the support line, and then work our way a little bit higher up to 339 or potentially 342. And then I think the sellers start to step in. Those are the levels. That's the video. It was a long one. I just tried to run through some key trade ideas and concepts that I saw. So leave me a thumbs up if you guys find value. Catch you on the next one.